Welcome back. Our research team is standing by with the list of top 10 stocks to watch out for. First up, Lupin, very strong set of... And Ekta is here to give us the latest on that. Ekta, over to you.
Well, yes, definitely the numbers were better than expectations. So we had the revenue, which was up around 22% for Lupin, the EBITDA, which came versus expectations of around 776 odd crores, which resulted in a quarter high in terms of margins at around 18.2%. Profit also better than expectations at 489 odd crores. Reason for this is primarily because Spiriva generic, an inhaler that they had launched a couple of months ago in the US market. So they didn't even fully capture it in the whole of the quarter, but it was partially there in this quarter. But nonetheless, that resulted in the North American markets, which is around 38% of their sales, coming in at $213 million, which again was a multi-quarter high for them in terms of sales. And this compares to around $185 million that the street was anticipating and compares to $181 million in the previous quarter. So that is the big positive. India grew up around 7% The street was anticipating around 8 to 9% in terms of sales. But the big kicker for Lupin has come in from the US markets, which has resulted in the margins as well as the revenue beating estimates hands down.
All right, Ekta, thanks very much for that. Well, Pidilite is going to be in focus this morning for a bunch of things, but interesting news flow there as well. Mangalam, hi, morning.
Good morning. Interesting news flow indeed. As far as the numbers are concerned for Pidilite, nothing really to worry. In fact, the revenues were a mild miss as against street expectations on value terms, but the company more than made up for that in the EBITDA as well as the net profit. EBITDA margins as well as net profit were all above street expectations, as you can see the numbers on your screen. Year on year as well, there was a jump of nearly 36% in the company's operating profit and the net profit too. The volumes, they grew by about 8% versus street expectations of 4 to 6%, and favorable raw material prices meant that the gross margins expanded by over 1,000 basis points as against street expectations of 750 to 800 basis points itself. The management also positive on rural demand as well as near-term demand. But here's where the interesting news piece comes. They've announced a foray into their lending business to support their ecosystem. In fact, they will acquire a company from the promoter entity at about 10 crore rupees, a company that holds an NBFC license. It's called Pargro Investments, and they expect to invest about 100 crores in this business in tranches over the next 2 years. Yes, this will grab a lot of headlines that Pidilite is looking at giving loans to its vendors. But, if you just take a look at the absolute numbers, it's not too much. It's about 5% of their annual profits. They're going to do that over the next 2 years. And importantly, a lot of companies already finance their vendors. So this is just another way of going ahead and doing that. So this will be looked at more as an operational thing than, something that the company would look to scale and become a full-blown NBFC.
Got it. All right, Mangalam, thanks a lot for that. Well, let's go back to Ekta. She's tracking a couple of more pharma companies. Ekta?
Well, yes, I'm looking at Biocon and Eris because they did announce a deal post-markets yesterday where Biocon will be divesting 2 non-core branded formulation India business units to Eris Life. So they will be divesting dermatology as well as nephrology, which is basically kidney-based drugs, the branded formulation businesses for both of these segments for 366 crores to Eris Life. So this business includes 20 mother brands of Biocon, with an FY23 revenue of 90 crores and the current revenue run rate of around 100 crores. The deal will be partly funded through debt financing for Eris Life. It is positive for Biocon because they will be getting 366 crores in Eris Life because they will now be entering nephrology with this particular acquisition. Remember, in the past also they've had multiple acquisitions such as neuropsychiatry, dermatology. They've entered these segments through acquisitions, and they will now be entering the nephrology segment. They will be strengthening their position in the dermatology segment with this acquisition. Remember, Eris gets 98% of their sales from India. So hence, it is going to be building its franchise within this space, and this should probably help them. I expect both the stocks to be in the green.
Okay, thanks a lot, Ekta, for that. Well, Tata Power also reported a good set of numbers, decent top-line growth, margin expansion. Vivek is here to give us the latest on that. Vivek.
Well, good morning. So many moving parts as far as Tata Power is concerned. But this time around, while certain levers like, the coal profitability that the company enjoyed till a couple of quarters ago, while that is missing, other aspects of the business has come in to save the day. Now, when you're talking about Tata Power, the numbers overall has been a beat as far as the consensus, the expectations were concerned. Number one, console PAT was aided by Mundra on the back of the fact that Section 11 extension as far as emergency usage of thermal power plants was concerned. This particular development actually aided the profitability, and it's set to continue till June of 2024. So that is one positive trigger. However, on the to offset this particular gain, the coal profits, especially from Indonesian mines, fell this particular quarter on the back of moderation as far as coal prices were concerned. So looking at the numbers themselves, revenues higher by 12.2% on a year-on-year basis, EBITDA strong, up 75% on a year-on-year basis, and margins quite strong at 19.6%. Profitability up 8.8%. The company sales, higher project execution, higher PLF, the plant load factor as far as Mundra was concerned, and higher sales and a strong turnaround as far as Odisha was concerned actually aided the operational performance of the company this time around.
Okay, all right. Thanks a lot for that, Vivek. And remember, you can catch the management of Tata Power at 9:30 a.m. on Bazaar later today. Well, let's hop across to Surbhi. She's tracking United Spirits. Hi, Surbhi. Morning.
Good morning. So United Spirits, the numbers were ahead of expectations. If you adjusted for the sale of the portfolio, popular portfolio, the revenues were up 13% on a year-on-year basis. The gross profit margin expanded nearly 300 basis points on a year-on-year basis, and sequentially also up 40 basis points. EBITDA is up 21% and margins are up nearly 120 basis points. Now this beat has come from the prestige and above segment, which is the premium end of the segment. There the volumes were up nearly 4% and the realization were up 13%. In the popular segment, the volumes were down 11%, but that was on expected lines, and the realizations were up 1%. Additionally, the company has approved an interim dividend of 4 rupees, and this is the first dividend in close to a decade that they've announced. So I'm going with a green for United Spirits.
Okay, green for United Spirits, high-spirited first thing in the morning. Well, Vivek is with us to talk about BHEL and how that one looked. Vivek, over to you.
Well, that's right. BHEL, the same story continues. The order book is quite strong. Order inflows continue to be quite robust. But what's actually marring the performance is the weak execution or operational weakness that the company is seeing. So revenue from operations down 1.5%. But what's really disappointed is the fact that, operational profit has come in at a significant loss figure this time around. Along with that, on the back of that, rather, the loss has come in this time around on the bottom line of over 230 crore rupees. However, to offset, all of the negative operational performance, have a look at the order inflow. Order inflow this time around at 17,900 crore, largely aided by the large NTPC Lara Super Thermal Critical Power project that BHEL has received in the quarter gone by. Along with that, the order book this time around is at 1.1 lakh crore. Quite significant, almost 4.8 times, the trailing 12 months revenue. So weak operational performance offset by a strong order book.
Thanks a lot for that, Vivek. Well, Mangalam joins us here again to tell us about Bata and Patanjali. How are those numbers, Mangalam?
Well, for Bata, it was weakness because on the top line, the company continues to disappoint for the third or fourth quarter in a row right now. 819 crores is what the company reported on the top line, as against street expectations of around 870 crores. Though the EBITDA was largely in line with expectations because of gross margin expansion, and the net profit was impacted as against street expectations largely because of a 40 crore exceptional expense towards voluntary retirement. But they continue to add new stores. This quarter, they've added around 30 odd stores, and their sneaker store business is doing extremely well. Along with that, they have a manufacturing tie-up with Nine West and the athleisure business. So those are a couple of triggers that we'll be watching out for. As far as Patanjali Foods is concerned, yes, the revenues declined by about 8%, but I'm going with a green for that one, largely because these companies have now exhausted their high-cost inventory. The losses in their oil business are coming down, and as a result of which, despite an 8% decline in their revenues, the EBITDA doubled, and the net profit also jumped from 112 crores to close to around 254 crores. So, see green for Patanjali and red for Bata.
All right, Mangalam, thanks very much for that. PI Industries reported a good set. Sonal has got details here. Sonal.
A good set yet again, and PI Industries has been outperforming the industry. A strong quarter again, and it was a beat on all parameters. So revenues came in at 2,100 crore rupees, largely in line, but it was really the margins where the beat came. So EBITDA at 550 crore rupees versus a poll of 520 crore rupees. Margins at 26% versus a poll of 24%, leading to a beat on profits as well, which came in at 480 crore rupees. Even on a YY basis, if we look at the reported numbers, revenues, they are up 20%. 8%. EBITDA is up around 170 basis points, leading to a profit growth of 44%. It was led by the exports business, which continues to do well. They saw a growth of around 22% in exports business, but the domestic business continues to see some pressure. That's where they saw a reduction of 2% on a YY basis in their revenues. Pharma was 6% of their total export revenues. The EBIT loss continues, but that is something that the management expected. Expect a green tick on the stock today.
Okay, a green tick on the stock today. Thanks a lot for that. So lots of good numbers actually. Tata Power, United Spirits, PI Industries, Lupin. But let's also talk about something other than earnings. RK Forgings is on our radar. Vivek has the latest on that. Vivek, over to you.
Well, that's right. So RK Forgings, yesterday has intimated the exchanges that it's going to launch a QIP to raise funds. Now, the SEBI floor price for this particular fundraise works around 644 rupees a share. However, according to our sources, who had access to the term sheet, what we understand is that the company is looking to raise up to almost 1,000 crore via this particular fundraise. The indicative issue price is at 11% discount to yesterday's closing. 614 rupees a share is where the issue price is likely to be at. So this implies an equity dilution of 9.9%, almost a 10% equity dilution for fundraise. And we understand that the company will utilize the proceeds of this particular fundraise. There's a twofold purpose. Number one is for debt reduction, and number two for working capital expenditure.
All right, thanks a lot for that. Well, here's a quick recap in case you missed out on any of the stocks with positive news flow. There's Pidilite Industries, Tata Power, Lupin, Biocon, Eris Life, United Spirits, PI Industries, Patanjali Foods and Ramkrishna Forgings, while stocks with negative news flow, there's BHEL and Bata. But there were a long list of other earnings as well. So Surbhi is here. She's put that together for us. Surbhi, what's your list looking like?
So I have quite a few on my list today. Let me start with Phoenix Mills. It was a good set of numbers. Revenue up 34%, EBITDA up 35%. Margins have expanded by 100 basis points and PAT is up 40% on a year-on-year basis. Brigade Enterprises, they have good residential update. Also, the improvement in commercial sales is quite good. For residential sales, the net sales at 1233 crores versus 992 crores in the previous quarter. The net volumes at 1.6 million square feet. For commercials, the volumes have tripled sequentially at 21,000 square feet and sales at 16 crores versus 4 crores in the previous quarter. Masgao Dock, again a good set of numbers. Revenues up 7%, EBITDA up 50%, margin expansion of nearly 300 basis points. MedPlus Health, revenue up 26%, EBITDA at 85 crores, margins at 6% versus 5.3% same time last year, and profits at 15 crores. MCX, sequentially, it's a good performance, revenue of 13%, EBITDA loss of 17 crores versus a profit of 11 crores, but the loss is due to a contribution in the settlement guarantee fund and also software expenses, which were up 48%, but that was on expected lines. Net loss of 19 crores versus a profit of 19 crores in the previous quarter.
Thanks a lot for that list, Surbhi. Well, let's turn our attention then from the equity markets to the commodity markets. Manisha Gupta joins us as always to help us out on that front. Hi, Manisha. Good morning.
Morning, Nigel. Thank you for that. I'm keeping an eye on the crude oil prices, where we've seen a 6% decline in this week after 6% of a decline in the previous week as well. We are trading below $80 a barrel right now, and the prices almost hit $78 in the New York session yesterday. So the pressure has just about continued on the back of demand concerns from China and U.S. There are reports suggesting that the U.S. gasoline demand could hit a 20-year lows per capita in 2024, and the U.S. inventories at a multi-month high doesn't also help the cause. Apart from that, the street is also looking at weak Chinese data, weak European demand as well, and that continues to weigh onto the market. Much of the geopolitical or the war premium also seems to have gone away from the prices, and the street is now talking about $78 or even $75 a barrel of a possibility coming in for the crude oil prices within this month.
Okay, thanks a lot for that. So Brent crude well below $80 a barrel. Let's slip into a quick break. On the other side of the break, Dipan Mehta, Director at Elixir Equities, will discuss some fundamental stocks. We'll also be joined by Ramani Dati, who's the CFO at Team Lease, to discuss the company's Q2 performance. Stay tuned.